If you have set up a Dubai foundation to hold your assets, the next step is often finding the right private bank to work with. In this video, we'll look at how private banks view Dubai foundations, what they need from you, and how to increase your chances of getting accepted. We'll also talk about which banks are best suited, what documents you will need, and what relationship looks like once you are onboarded. If you're planning to use your foundation as part of a larger wealth strategy, understanding this process is very crucial. Before we start, my name is Shiraz Baid and I'm the founder at Lepidus Wealth, where we help clients and families protect their assets using a range of tools including trust, foundations, wills, and offshore structures. So if you own a business or real estate, don't wait until a legal or health crisis to start thinking about protecting what you have built. Instead, request your free and customized asset protection plan by clicking the link below. You can then implement it step by step as your journey progresses. Despite the Dubai's robust foundation framework, not all private banks are familiar or comfortable with these entities, especially when the foundation is used to hold portfolio of assets, distribute wealth to the beneficiaries, or sit on top of a multi-jurisdictional structure. That disconnect leads to delays, document request, and sometimes outright rejection. It can feel like sometimes you're trying to explain something very new to a system that is built for traditional structures. And if you are navigating this space, clarity matters. So let's break down how private banking for Dubai foundations actually work and what you should look out for. Private banks are selective by design. They don't onboard every client, and they certainly don't onboard every structure. But once they do, the relationship is far more personalized, secure, and opportunity rich than retail banking ever could be. These banks operate with discretion and understanding of complex wealth dynamics. So, what are these banks actually looking for? First, they assess the foundation's purpose. Is it purely for asset protection, estate planning, a family office structure, or is there any underlying business activity? Banks want to see substance. That might mean showing where the assets come from, who ultimately benefits, and what the foundation will be doing going forward. The more strategic clarity you can provide, the easier the process becomes. Second is that they evaluate the people involved. Most private banks will require KYC, that is, know your client documentation on founder, the council members, protectors if there are any, and often ultimate beneficiaries. Even if the foundation itself is the account holder, the individuals behind it are still subject to compliance scrutiny. A transparent governance structure hence becomes essential. The third factor is that they look at the asset base. To work with private banks, the minimum requirement can vary, but some banks will consider foundations with $1 million in investable assets. Others may expect $5 million or more. Beyond the number, what matters is the quality. Is the wealth held in cash, real estate, equities, private company shares, and does it represent generational wealth or recent liquidity? Banks are not just measuring wealth, they're measuring stability and strategic intent. Now, let us also discuss geography. Not all private banks are in Dubai, and they don't have to be. Many clients set up their foundation in Dubai and then bank in Switzerland, Luxembourg, Singapore, or Liechtenstein. And if you ask why, because some of these banks are more experienced with international structures, offer broader investment products, or simply provide a reputation that aligns with the family legacy planning. In some cases, having both a Dubai foundation and a Swiss bank account creates a robust east west pairing. But still, Dubai is catching up. Several private banking divisions of international banks have expanded their presence in the DIFC, that is, the Dubai International Financial Center. These institutions understand the local foundation regime and can offer services in line with global expectations. And for clients who want physical proximity and cultural fluency, that's a significant advantage. Now, let's talk about the onboarding process. For a Dubai foundation, the first step is compiling a clean, complete set of documents, and this includes the foundation charter, registration certificate, a notarized passport copy, and proof of address for each relevant party, and sometimes the source of wealth evidence for both foundation and the founder. For the complex cases, banks may ask for a flow of fund diagram or legal opinion to support the structure. Preparation makes all the difference between a smooth experience and weeks of back and forth. This stage varies greatly depending on the bank's internal policies, the jurisdiction involved, and whether the assets are being transferred from a high risk country or not. If your foundation involves multiple layers, say a BVI holding company owned by the foundation, which in turn own a European asset, expect deeper scrutiny. Banks today are highly sensitive to regulatory reputational risk. Assuming compliance is cleared, the next stage is relationship building. Unlike corporate accounts, the private banking is not transactional. You will be assigned a relationship manager, often supported by investment advisors, legal counsel, and even succession planning experts. This team becomes your interface with the bank, helping manage investments, reporting distribution, and future structuring. It is a partnership, not just a service. Some banks even offer family governance support. That means helping families articulate their values, succession wishes, and philanthropic goals, and then documenting them formally so the foundation can operate across generations with clarity. These soft structures are as important as the legal ones when the goal is generational continuity. Now, I want to address a common misconception that private banking is only about investments. In reality, it can also involve custody of shares, administration of the SPV, real estate advisory, concierge services, and even pre IPO strategies. If your foundation is part of a larger wealth structure, these capabilities become particularly relevant. Having a banking partner that can see the whole picture would mean that you won't be left patching together services across providers. Of course, not every Dubai foundation qualifies for private banking, and not every private bank is the right fit. Some are better for families focused on real estate, and others cater to tech founders with liquidity events. A few specialize in cross border families with succession challenges across common and civil law systems. The key here is alignment between your goals and the structure of your foundation, and the bank's appetite to cater to it. A well aligned banking relationship can last for decades. So, where should you start? You can start by clarifying the objectives of your foundation. Is it a long term holding vehicle? Is it for managing assets? Is it a platform for family succession? And from there, shortlist the banks that understand Dubai foundations and have the right jurisdictional expertise. Then you can prepare your documentations carefully, because a well prepared file can cut onboarding time from months to weeks. You want to show the bank that your foundation is not just compliant, but well governed and purpose driven. Private banking for Dubai Foundation is not a plug and play system, but when done right, it will become a crucial part of your multi generational planning. It offers peace of mind, access to global opportunities, and a dedicated team looking out for your legacy. The structure will protect the assets, but it's the banking relationship that activates them. As I mentioned earlier, if you own a business or real estate, don't wait for legal or health crisis to start thinking about protecting your wealth. Many people think asset protection is only for ultra wealthy. But the reality is that some of these solutions cost as much as setting up a free zone company in Dubai. If you want to secure what you have built and ensure your legacy, you can request your free and customized asset protection plan by clicking the link in the description below. And if you're serious about building long-term financial security, you should really check out my next video right here.